you have a high probability of this happening, and sent me a white paper about something called the unit, which he felt was what is the proposal that's actually being pushed forward. And now we have the dollar has lost 20% of its value just since COVID alone.
Various states in the US talking about issuing gold certificates.
Clearly these systems are breaking down, that where if you have over 51% of the world's oil exports essentially being priced in a gold-backed currency, does the US have to match that at some point? At the heart of that continues to be gold. Just last week we had a proposal from Senator Loomis, who wants to start a strategic Bitcoin reserve, and what's one of the ways they're talking about funding that? Revaluing gold certificates. We've heard comments from Dutch and German central bankers talk about their revaluation accounts.
Surprise, over a weekend, here you go, okay, well, we decided to, reevaluate gold from 2,400 to 5,000 or 8,000. $100 trading range, $150 trading range is just nothing. That's just sideways market movement. This is why I think digital gold is actually going to be a big theme going forward. Good day, everyone. Welcome to Financial Liberties. And if you listen to the first minute of this video, you are going to understand what Chris Marcus from Arcadia Economics and I are going to be discussing, and this is just touching the surface. We're going to be getting into what the BRICS nations are doing, as well as possible gold reevaluation, how it could be implemented into a crypto blockchain solution where digital gold becomes the new norm for payment systems. And we talk about the price of gold, some technical analysis on it, as well as why the mining sector is lagging. So I encourage you to listen to this interview completely, as there's lots of nuggets in there. And if you did like it, like and subscribe, and let's get right into it. Hello, everyone. My name is Vin Maru from Financial Liberties, and today we have a special guest. His name is Chris Marcus from Arcadia Economics. And Chris is someone I met years ago. I had been on his show quite a bit, but he's been following the precious metals and the commodity sector for a couple of decades, I would think. And I met him probably over 10 years ago. So I asked him to come on the channel and talk about commodities in general, gold, silver. He has a lot of great guests on his YouTube channel, and we'll link that in the description below. But Chris, welcome to our show, and please tell us a little bit about yourself.
Hi, Vin. Nice to see you again, and thanks for having me on the show. And yeah, it's been now a decade and a half, so close to a couple of decades. But I started studying gold and silver back in the middle of 2009, shortly after the housing bubble collapsed, and I was trading equity options back on the American Stock Exchange when it started collapsing. Then we shifted over to New York Stock Exchange, and basically I found it interesting how you had Bernanke saying subprime was contained, and a lot of the issues that happened seemed to catch most people off guard and ended up being a bit blindsided. And fortunately, I just thought it would be worthwhile to study the people who had seen it in advance. And pretty much across the board, everyone I found who had seen some of these issues that unfolded in the way they did back in 2008, we're all talking about the monetary cycles from the Federal Reserve and gold and silver. And that seemed to make a lot more sense than the Dick Cheney deficits don't matter and just keep on piling more borrowing and spending infinitely, which I guess back in 2009, I didn't imagine it would go on as long as it has, although perhaps now here in 2024, where we've seen gold continuously set record highs throughout the first half of the year, metals have pulled back along with the stock market in the last couple of weeks. But it seems like a lot of the things that people have been talking about and seeing, my case for 15 years, in some cases people have been seeing for decades, yet the way it's developing now, where it's not a matter of speculating or hypothesizing about what might happen in a couple of decades, but we see that countries are standing up and saying, all right, we don't want to use this system. It's becoming clear and overt, and not just talking about it, but certainly we can dig into some of the things that have happened with the BRICS. But yeah, it seems like a lot of the things that were once far off are happening now, and certainly been an exciting year to see gold and silver rally a little bit in support of that.
Absolutely. I got involved in the precious metal space, started in 2005. So just a few years before yourself. But, I got to see that whole boom and bust happen after. And I was writing a newsletter and speaking at conferences at the time. And I kind of got out of the commodities sector, but and then went into cannabis, and now I'm kind of back into commodities as well as focusing on some of the digital platforms that are being built for global payment systems and this whole fintech space that's going on and how crypto is going to be layered into it. But I see a polarized world where we're having a lot of the West kind of now adopting and moving into the crypto space, but yet the BRICS nations and emerging markets who have lots of resources are talking about backing their currencies with commodities, in particular in gold. And so I think we're going to see this whole polarized world where, one side of it is talking digital currencies, CBDCs, almost more control, yet the other side, the emerging markets and the BRICS nations are really still in this infrastructure building, but they realize the value of precious metals, and this is something we've both known for quite a while. So how about we dive right into some geopolitics and kind of talk about the US dollar, possibly, a lot of talk of it losing reserve currency status, the petrodollar kind of being circumvented and now dealing direct with other currencies out of the Middle East. BRICS nations rising, and they're talking about their commodities. Russia, there's just so much we could talk about in terms of geopolitics. We'll start with that, and then maybe at some point we'll shift into the actual metals itself.
Yeah, well, interesting what you mentioned about the dollar, and certainly as someone who's been looking at the Fed policies quite a bit, primarily, and now we have the dollar has lost 20% of its value just since COVID alone. So, on one hand, you would think that would be at the heart of it, and I think it will be. On the other hand, you can have a dollar that buys a lot less, is a lot less valuable, yet is still the world's reserve currency. So I think the way in which it's the world's reserve currency will probably continue on for a lot longer. In fact, on the other side, though, what seems to be coming more to a head right now is the idea of the Treasury as the store of value, which again, a lot of that goes back to the petrodollar arrangement in 1973, where Middle East produces oil and it's recycled into treasuries, and to see that changing a bit now, especially because if the treasury is losing value, and obviously we've seen the debt climb, we've seen the deficits climbing, so it's not as if we're chipping away at it. And if you get to the point where someone digs up oil, so if you have an oil producer taking oil out of the ground and they're storing it in treasuries, but it's buying them less oil by the time they want to sell those treasuries, that becomes a problem. And that's what I think we've seen countries moving towards, and why you're seeing countries, especially in the Eastern nations, turn back towards gold. Obviously, Russia's Vladimir Putin has been quite vocal about that for years. I mean, he's said the he rants on and on about the flaws of the dollar system, the whole cycle of borrowing and printing, and that other countries are subject to that. And for a while, they were talking about it. We heard comments from Sergei Glaziev, who would talk about ways that gold could be used. And something that's emerged earlier this year, one of the viewers to our show sent me a white paper about something called the unit, which he felt was what is the proposal that's actually being pushed forward. Fast
Okay.
forward a couple months later, we've had this rally in gold and silver, and now some of the Russian websites, as well as Pepe Escobar, who is a well-known geopolitical reporter, have been putting more details. We have Putin referencing the unit. It's been listed as an item on the BRICS Development Council. And from the person that was the one to inform me about it, who's done some pretty in-depth research on this, he seems to believe that this is, I mean, it will be a done deal when it's a done deal, but that you have a high probability of this happening and a high probability of it being implemented successfully. Now, we'll see in due time if that happens, yet clearly there's a shift away from the system we have now, which has not worked out for a lot of different people in a lot of different countries. And at the heart of that continues to be gold. Just last week, we had a proposal from Senator Loomis, who wants to start a strategic Bitcoin reserve. And what's one of the ways they're talking about funding that? Revaluing gold certificates. We've heard comments from Dutch and German central bankers talk about their revaluation accounts. And this is all in a time period where we see those debt loads growing. And as much as governments don't generally talk about these things, in terms of the realistic, viable options, as far fetched as it may sound, that they could actually implement to do something about that, gold remains one of those options. And it seems like the East is moving towards that, whether the West likes it or not, which that also raises an interesting thought down the road, where if you have over 51% of the world's oil exports essentially being priced in a gold backed currency, does the US have to match that at some point? You would think, in a competition of currency standpoint sense, that that could well eventually be the case. So perhaps still in the earlier innings of some of these things, yet you can see we're not back in 2008 or 2020, where now some of these things are really starting to pick up steam.
Yeah, absolutely. I mean, there's been a lot of changes and developments over the time that I started even covering gold, because I think it was back in 2016. They talked about um, using gold as a tier one asset class on the bank's books, and then we went through this bear market in gold, and I think it was just kind of, there's the focus shifted from investing in gold at that time at the end of 2012. It kind of seemed like the bear market started. But then, we went back into tech and now crypto and all of this other stuff. But in the last year or so, gold has rallied, and we're starting to see it sitting close to all-time highs, not maybe at the all-time highs today, but we're in $100 range, and it's holding, and it's held there for quite a while. If this would have been a parabolic blow off in gold, you would have seen maybe a 1 week, 2 week period where it just goes parabolic and then comes right back down. And but it's not. It seems like it's consolidating in this 23, $2,400 price range, give or take 50 in there. And I suspect with BRICS having their major meeting this October, you're going to see more nations join it. I think that's where you might start to see a bit of their cards and what they have planned for their commodity-backed currencies, and gold being a part of it. And you've seen various states in the US talking about issuing gold certificates. So I suspect that we could see both systems emerge, and that would be more the crypto CBDC system, the digital currency systems, and the payment rails that are going to be used there, but also a backing of gold and silver on some of these other platforms, and which is why I think digital gold is actually going to be a big theme going forward. Something I'm updating in my report and talking about it is a lot of people may not own the physical, let alone, a lot of people they have US dollars sitting in a bank account, but what's the difference between holding one asset class or another? I mean, the US dollar is just, your dollars there. You could still own gold, have it in a digital form, use it as payment systems. And I think this system is actually going to be coming in the future. So could we see a mesh of the whole crypto/commodity space where commodities also get digitized and tokenized as part of the backing of all the financial system? I suspect that's kind of where we're heading towards.
Yeah, it certainly, I mean, again, when I saw you in person, I think that was about 2 years ago. Even back then, it was talking about what could happen, what's possible. Now we see steps towards some of these things. And few things that you mentioned there that, first of all, I'll point out. I mean, we've had gold sell off pretty sharply over the past week, yet, especially on the days where the stock market was down, we saw gold sell off. Yet, after a sharp sell off, you still have $2,430 gold, which I think speaks to the strength of the rally, where we were just around or maybe even a little below 2000 at the beginning of the year. I'll take a look back here. It was 2068. Okay, and dipped below 2000. We thought we were going to have 6 or 7 rate cuts, was what futures were pricing in at the beginning of the year. That hasn't happened. Gold's gone up $400, which in any normal year is a stunning move for gold. Yet here it is breaking through the $2,000 mark. And I get it. There's some of the gold and silver bugs who are not happy with the recent pullback, but to see it rise to 2,400, go even higher, and still be at 2,400, I think speaks partly to what's going on in China and some of these other BRICS nations. And perhaps if those reports on the unit do manifest, as I believe is happening now, um, would certainly fit a lot of why we've seen more demand for gold in terms of some combination of crypto technology and gold and silver. I've always thought that that made a lot of sense because, as someone who's a big advocate of silver and loves silver for a million different reasons, I also realize we live in a world where if you want to buy something from Amazon, or you pay a contractor in the Philippines, what am I going to chop off 0.364 grams of my silver coin versus having some sort of digital mechanism? And there's a couple companies out there that are doing things like that already. And I would imagine that perhaps it will be if you look forward 10 or 20 years from now, we'd have some combination of the two. And, but yes, I think certainly with the invention of the crypto technology and the fact that we're reaching this point where clearly these systems are breaking down, that combination of those two, and hopefully will result in competition of currencies rather than I'm sure there will always be that government control element, but to me, what's really encouraging again is if you have the BRICS, if they do successfully, whether it's the unit or some other mechanism, it seems like they're not going back.
Yeah.
So we'll even assume for a second that what I've been looking into and following and think actually has a larger probability of occurring than most others might agree with, and that's fine. But it seems clear that there's not a desire, at least at this time, to go back to the current system, and some imbalance flaws that would make that incredibly difficult to do so, even if there was a willingness to.
Yeah, absolutely. I mean, I think we are in this huge transition period. I mean, there's been a lot of talk about it on both sides of the camp, and it's going to be one of those interesting times where it's kind of like the whole Bitcoin is your storage of wealth theory, and now you've got the ETFs and Ethereum and all these coming out. But in emerging markets, and I live in Mexico, and I met you down here, you were here for a while too, is a lot of them are not invested into this. Now, I think it's a growing population that are getting invested into these digital currencies and understand it, but I think that's more of a speculative play for them, right? I mean, you get some upside, you get leverage trading and whatnot, but gold been around for thousands of years and as kind of sound money. My thought, and I was talking about this with someone the other day, was you have these emerging markets and African nations. Burkina Faso just announced that they're talking about a backing their currency with gold. So a lot of these nations don't have the reserves to buy crypto and hold that as its currency. But you could see this whole digital platform set up for payment systems that are based on blockchain technologies and then various tools within it. Whether I don't think it's going to be Bitcoin as the daily transaction mechanism, and that's more likely going to be Ripple and XRP. But if you have these BRICS and emerging markets nations focus on extracting the commodities and holding it within their own individual countries to build out their own nation's infrastructure and all that, but in terms of the monetary backing of their currency, they use gold, which is going to be extracted out of these African nations and Latin American nations as well. then they actually have the ability to bond together and dictate, well, yeah, we're going to use gold as the backing for our currencies. Who cares what the West wants or does? But that will strengthen that alliance. And those alliances are growing. And my suspicion is that at some point the West is going to have to realize this is a real thing in gold. And like you kind of mentioned, there may be a point of reevaluation, and they're not going to tell you it. It'll be just kind of like surprise over a weekend. Here you go. Okay, well, we decided to, reevaluate gold from 2,400 to 5,000 or 8,000 or whatever. Pick the number. I mean, there's many ways you can calculate it. I don't know what the exact number will be, but you were talking about the gold chart and you showed that, and I saw from literally April onwards, it had been sitting in this sideways consolidation range. So when these gold bugs that are new and they're and maybe haven't been in the first cycle that we saw earlier, $100 trading range, $150 trading range is just nothing. That's just sideways market movement. Unless you get, and from that chart, it looks like it's around 23.20, 23.30. It breaks down there and it continues to dive down, then there's bigger issues of why it's breaking down. And I think that would be because you've got all markets breaking down at this point. So if they let the stock markets collapse, could gold get sucked down again and maybe find that 2000 price point as the new support line? It could happen, and I'm not ruling that out. But that would be a time where I think it'd be good to accumulate more if or some new investors come in, because gold at 2000 acted as overhead resistance for the longest time, and now we've broken through that overhead resistance, and it's not on a very short-term basis. We've been consolidating at this range now for 4 months, and I can't see a reason why gold will collapse here unless you get a systemic global collapse in all markets um, coming into the fall. And I'm not ruling that out either. But if that doesn't happen, then my suspicion is the demand for gold is just going to continue to rise. You're going to see these emerging markets. I don't know if they'll talk about gold and stuff, but one of the most interesting countries that I see is India. Now, a lot of people own a lot of wealth in gold. I mean, probably as a percentage of the population, in gold in the hands of the Indian people is probably higher than most other countries. China owns a lot of gold, but I think a lot of that's held with the Central Bank of China. Russia owns a lot of gold. Then a lot of these other countries own a lot of gold. But in terms of gold in the hands of the people, in the actual people, and in jewelry form, in India, jewelry form is 22 carats, so it's a high value gold. If gold does get reevaluated 2 or 3 times here, and imagine just the average Indian who may not even have real estate or whatever, but they've got gold necklaces given to them at weddings and jewelry, their wealth will rise as a result of it. So I'm very bullish on India long term, just in general as an emerging market, because it's got the right fundamentals to be probably the next superpower. And I kind of believe that will happen. It's not going to happen overnight, but it'll be a good 2 or 3 decades to play out. But India is kind of at the point where I saw China maybe 20, 30 years ago. And so it's interesting time to see that happen. But yeah, I mean, if there's any thoughts that you want to share on that, I don't know.
Yeah, well, it's especially interesting in India right now because it was just about 2 weeks ago where they lowered the import tax on gold and silver. And my understanding is we're right ahead of festive season when it's a lot of purchasing of gold and silver. So when you think about what could happen in the second half of the year, I think with the lower import taxes, certainly reasonable to see an increase of some level due to that alone. And at the same time, India also repatriated, I believe it was 100 tons of gold from the Bank of England, and they've been adding to their reserves again this year at one of their more rapid paces. So,
Yeah.
and
Well,
and I'm curious now on silver, where India is generally known to be pretty price sensitive, and they had a record month of imports back in February of this year. Then it dropped off a cliff since then as the price was going up, with the price being over $32 at one point. Now, what is it? Think I got a little bit below 27 today. Yeah, 26.78 right now. So, especially with the taxes lowered and the silver price lowered, I'll be curious to see what the figures over the next couple of months look like. But India had record-setting imports of silver in 2022, slowed down last year, had a record-setting month earlier this year, although they also have offered some plans of aggressive solar forecasts and how much energy they're trying to produce. So, yes, India is going to be a key player in a lot of these things, and would conceivably be one of the BRICS members that would be using the unit as a trade settlement currency. Again, as if that does get moved forward, as I think that it will. But yeah, India very active with gold and silver, and seen some changes there recently.
Yeah, well, generally I find it with the Indian market is their holiday festival season. The big one starts kind of in October and it goes right through into February, March, which ironically is kind of where, if you follow historical norms of the gold cycle, you'll get the summer lulls, and we've seen opposite of it this year. I was expecting somewhat of a decent pullback this summer into maybe even the 2150 range. Never even seen it but um, you've got BRICS nations meeting in October, then you've got precious metals, silver and gold buying season coming up. So I really just can't see a reason why the gold sector or the price of gold and silver will collapse much further than here, unless again we get some sort of a kind of a black swan event. But
Well, I could give you another reason if
sure.
you'd like. Uh, Keep in mind that you have supply and demand of gold and silver, and then you have it also priced on the COMEX, which often is driven by trading and speculating of what the Fed is or isn't going to do. With that said, on the rally in both gold and silver, we did see that short position get pretty big. In terms of the short position, the banks are holding, and that's been over time one of the unfortunately more accurate indicators of where things are heading. And interesting to see, there has been some short covering in silver. I believe it was when the price was about $30. This was 2 weeks ago. Are banks going to cover their shorts at higher levels now? I guess, in other words, be on the watch for when the short position is high. Generally, that's been an indication the price is about to get clobbered. We've seen some of that. Maybe this is as low as it will go. You mentioned $2,000 gold earlier. Hmm. I would say in gold and silver, I'd never rule out anything, but gets harder to gets harder to imagine it dipping back below 2000. Now, both in 2008 and 2020, before gold and silver rallied, they both, silver was down to $12 for a
Yeah.
couple of days in 2020. So that would be interesting to see. I think that that's starting as we continue to progress forward, and especially based on the trading that we've seen so far this year. Probably take some set of events to get it below 2000 again. Not impossible, but I think we're seeing the sub 2000 gold getting a little farther away in the vision at this point.
Yeah, and I don't suspect it'll break below 2000. Now, the only reason why I'm using that as a mark right now is back in the last bull run at the peak of it, so 2012-ish, 2011, 2012, gold went to almost 1950 or whatever, and then it pulled right back down in that bear market. Then, over the last few years, it's been rising, and it finally broke that 1950 markish, 2000, let's call it. And now we're into these higher prices, a higher trading range. I've always found that markets generally try to tend. So that 2000 to me was overhead resistance. And I don't think we've seen a retest of that to see if it acts as support. So my thesis on the 2000 lower target price of gold would only be if we again get to some sort of a major sell-off in all markets, and there's kind of liquidation events going on, which this last couple of weeks almost turned out to be that case with the yen
Yeah,
carry
I
trade.
think we're in the environment where that type of event is higher than normal probability. So certainly in the environment where you can see that.
Yeah, so that's my only thesis on why I could see that happening. And again, we don't have crystal balls on all this, but the fact that it's sitting and consolidating in this 23,400 range is very bullish, because it's been this way now for some 4 or 5 months, and I just continue to see it consolidate here until you have a catalyst to break over 2,500, and then go to the next level higher. So I mean, if the 2000 was the overhead resistance, let's just say under 2,500 was now the overhead resistance, and we're in this 2430 range, it's dipped down a couple of times to 2350. That was let's call it $500 move. If we break out to the next trading range, and I see wave patterns happen in two sections, so we're in this first section wave up. My suspicion is maybe later this year or sometime next year, we could probably see 3,000 on gold easily.
I don't think we're that far off, and especially with where we're at in terms of the rate cuts. Interesting how that changed this week. I mean, we heard 50, 75 basis points of cuts by September on Monday. I think that's backed off a little bit, but yeah, between the fact that you have debt expense is now just cutting into the budget at a higher level, and it just feels like there's a lot building, and certainly with the rate cuts, 3,000 I'm guessing might not be as far off as it was for the gap over 2,000. So
Yeah,
there.
well, my suspicion, it breaks over 2,500 if we start to see rate cuts and the Fed printing and bailing out the economy. Uh, my gut's telling me they're actually not going to raise interest rates, or sorry, drop them any significant amount, maybe a quarter point, but I'm actually kind of in the camp that is just going to stay neutral here right now. And if that's the case, gold's in this trading range, but we're going to need a catalyst for it to break out. And I think one of it would be is if they had to significantly drop the rates and print tons of money, and that cycle again. Um, and the demand side of it, I think everyone's kind of in a neutral stance here. Because I honestly don't think China and India and all these other countries want gold to go ballistic right now. Because if they're still in accumulation mode, why would you want $3,000 gold when you can still accumulate it at these prices? So I don't think there's any push on their end to drive gold higher, because if they are going to come back with a partially backed gold currencies, then their interest is to keep it moderately low as possible.
Oh. Yeah, well, that could be what's happening right now. Again, we've seen a lot of the Eastern nations, and really that trend with the record central bank purchases started right after the decision to kick Russia out of the SWIFT system. So I think there's truth to what you're saying there. And yeah, it could be that they're getting their allocation ahead of a currency. Some of them already are large gold holders, but yeah, I think there's always been that dynamic. If they want to accumulate gold, then at the current pricing works out in your favor to do so. And yeah, it's going to be an exciting couple months. Tack on the election, and who knows? Maybe by the end of this year, we'll have a little more clarity on where some of these things are going. But you can see it shifting. I guess I would sum it up saying that, like I mentioned earlier, it's not talking about things that might happen 10 or 20 years from now. I mean, you're seeing them happen now. You're seeing the tariffs, you're seeing the sanctions, let alone the threat of real war, and not maybe a lot of the best trends for humankind, but certainly things that I think are worth keeping an eye on and being aware of anyway.
Sure. I kind of want to jump into the mining sector. Do you follow it still actively? I see you posting stuff on it. I haven't followed the miners in a long time. I've seen lots of charts showing how undervalued they are relative to the price of the commodity itself. Do you have any thoughts on kind of what's holding back the miners, why they're, especially the juniors and the exploration plays are devastated given the price of gold right now. Do you want to have any share any thoughts on what you see happening in the mining sector?
Yeah, well, it's obviously been a tough 2 years. Even now, I think we're past the 2 year mark now, and there's been a severe bear market in the miners. Hasn't changed a lot the environment with the rally this year, which is something that hasn't been great for the mining sector. Certainly for people invested in the mining sector, has been a bit challenging. Especially you have an unusual dynamic on the silver side, where Silver Institute reporting another deficit last year, and that's now 5 years of deficits with a projection of deficits going forward
Yeah.
in the amount of they're reporting about 200 million ounces per year. I understand knowing where every ounce of silver on the planet is shifting is more an art than an exact science. But geez, if we're only mining about 830 million ounces of silver a year, you have a 200 million ounce deficit. And it was interesting. Obviously, a lot of this has come from the demand for solar. And Oxford Economics put out a paper a couple months back, earlier this year, and they did a forecast on the growth of industrial silver demand over the next decade. And between solar, EVs, and the jewelry and other categories, they estimated 46% growth in industrial silver demand. So we're not, again, certainly it's pretty hard to know what happens 10 years from now at any given point in time. And I would suggest that the world that we're living in today with AI out there, people now saying, oh, that's cool. What do we do with it? Yet, in terms of a 10-year shift, I mean, probably less certainty now than at any point before. So, is that going to be 46% to the dot? No, but it's not like we're in an environment, well, we had a spike in silver demand the last couple of years, but that's being mitigated now. So, then add on that a lot of the companies now we're to the point where for the juniors it's been hard to get financing to keep some of their projects going. So at a time where ideally you would want to be getting more supply online, you're having the opposite of that happen. We've seen money go back into some of the senior producers. I would say maybe March, April, at the peak of the rally that was happening. Then that has dried up in the past couple of months. Some during that period, some of the juniors were able to get financed. That's become difficult again. So really the opposite of what you'd ideally want in an environment where you have a shortfall. And then add on that in terms of mining, you're talking 5, 10, 15 years between getting a project permitted, explored, drilled out, until something becomes a deposit that you're actually getting metal out of the ground. So even if you had 50 or $100 silver tomorrow, you're still talking about years before that silver is actually available. And in a world where we also have the green new agenda going on, and some of the amounts of metals that are being called to be mined for seem impossible, let alone what you have happening at today's mining environment, where there's going to be some companies that by the time that turns will do incredibly well. Has not happened yet. So, and we're going to in the coming years be feeling the impact of that more and more of what's happening now.
So I did an interview with Jesse Day from Commodity Culture last week, and we got to talking about it. It seemed like, during the first bull cycle that I've been a part of, which is at 2005 to 2012, mining and the miners took off because there wasn't crypto at the time. It came out in '08, but really, we had a commodities boom where the commodity sector, everyone participated, even with the juniors and the speculative exploration plays. And we're not seeing that in this cycle. But at some point, and I don't know if we're going to get it right now, but at some point, I suspect we're going to realize that there is going to be another commodity booms, and I don't know if that's because the world goes into major wars and then there's reconstruction after or whatnot, or maybe it's these emerging markets decide, you know what, we're going to back our own individual currencies by with commodities, which means now drives mining in those countries. But I always kind of question, will we see a trend of nationalization of mines at that point? Because you've seen it happen in Panama. So I think the mining sector and the companies that are in the mining sector are going to have a challenging time just for the next little while as these geopolitical events play out, and um and then after that, if there's a big realization that the building blocks of every nation is commodities, then we see this whole new commodities boom build out, and that's when I think some of the miners will take traction again. So I'm not really I'm looking at the miners. I think they're cheap. Could they rise just because the metals take off again? I suspect so, but to me right now, as you and I probably know, there's a cyclicality to even investing in the mining sector itself. And if you're in a start of a precious metals, or not a precious metals, but a mining sector boom, a commodities boom, it's always the seniors that take off first. Then it's the mid-sized producers, and it just trickles down eventually. And that trickled down to the juniors and the exploration doesn't even come in probably till a good couple years into a real identified trend that we're seeing in the mining sector and the commodity sector itself. So my suspicion is the seniors have done all right. Seems like it. I mean, I would think they should be sitting at all-time high right now, given the price of gold, but they're kind of touching the all-time highs we saw back in 2012. Um, but I guess cost of mining has gone up and oil and everything else. Um, so yeah, that's kind of my thoughts on it.
Yeah, it's definitely better on the gold side where, I mean, if you have the gold price just stay here for the next couple of years, and I mean, obviously you mentioned costs have been going up a lot, and I don't think 5 years from now we're going to have costs at the same level, but if they even stayed close with today's gold price, a lot of the senior producers are going to be doing really well on the gold side. Silver now down below $27. There's a handful of companies that their true cost of mining, I see estimates, in the $25, $26 range. So for now, again, most of the silver companies are byproduct miners and have gold as well, but you're not getting a silver boom at $26 on the mining side. Whereas on the gold side, if the price stayed above 2,400 and you didn't have a large surge in cost, then some of the senior gold companies would be doing quite well. And I would imagine you would see that trickle down, especially if some of them want to continue to grow their deposits and reserves. But yeah, it's
Are you
gonna
seeing a
be
lot of
what's that?
I was going to ask, are you seeing a lot of M&A activity in from the seniors buying up some great discoveries, or kind of,
No, I haven't really seen that yet.
we haven't even had a really M&A cycle that's coming in yet.
So, I mean, if people are looking at mining and wondering, am I too late in the mining stocks because the gold price has gone up? I don't think that's the case. And like you
Um,
said, I think you could make the case that they're still on the cheaper side, yeah, especially the juniors, compared to if we. And I wonder if what will finally get some of the money back on the Western side is that you finally get the rate cuts. Because, well, I could say, over a longer term, gold's going to do this or that, and maybe be right. The fact that if the West invests often based on what the Fed is doing, and now we're going from higher for longer, and when those cuts finally do begin to take place, maybe that'll end up being what brings the Western market back in. And I've seen a little bit of inflows into the ETFs and past about a month or so after steady outflows all throughout the rally in the first half of the year. Metal was leaving the gold and silver ETF. So I could see the cuts bringing that money back in. And if you have the East buying and then the West starts buying as well, then perhaps that could get us closer to the environment that many of the gold and silver investors like myself have been drawn to the sector towards, because we believe something like that is going to come at some point. But no, it has not happened yet on the equity side. And certainly if someone has a longer time horizon and is able to find good companies they like, I think it's certainly a good sector to be taking a look at right now.
Sure. Great. So we've talked about commodities. We've talked about the mining sector now, even touched on the crypto and geopolitics. I found myself having good success in investing when I find a trend early and then getting involved in a new trend that should play out for years. Identifying the leaders and then kind of getting involved with them. So outside of commodities and everything that you kind of specialize, do you see any major trends that are in play for an investment theme outside of these spaces that kind of is piquing your interest?
Um, I guess the deleveraging of how some of these things are going, and certainly looking at real estate, especially being down here in Florida, where you're starting to see inventories build, starting to see price reductions. So, some of the real estate trends, and just keeping an eye on how things are unfolding based on the monetary policy that seems like it's starting to change now. And again, I think in terms of a bigger trend, I think that that's what we're finally getting towards in gold and silver. And, but yeah, keeping an eye on real estate and just general markets to follow what I think is going to be a historic period of time that we're going through.
Yeah, cool. Well, I don't know if there's anything else, any other topics you'd like to talk about. So, we've almost been close to an hour now, so I appreciate your time. Um, but yeah, if there's anything else you'd like to discuss, by all means, let me know. Or
I mean, I think we covered most of the important things that are happening now that I'm seeing and looking at anyway. And I know we've been going for a while, and hopefully, though, this is helpful for people, especially at a time where in the Western half of the world, unless you're looking for things like these, you're probably not seeing them. But either case, that's what we cover on our channel at Arcadia Economics. And again, hopefully this was helpful for people. And good to see you again, Vin.
absolutely. I'm glad you mentioned your website. Is there any other social media platforms or how people can follow you?
I mean, we're on Twitter and YouTube and LinkedIn, and also at arcadiaeconomics.com. So
So
sure you can
they'll
find
find
us
you
anywhere
through
though.
through Arcadia Economics then.
Yeah.
Perfect. Great. Well, it was great seeing you again or talking with you again, and hopefully we'll catch up soon. Take care.
Well, thanks, Vin. Appreciate that.
Take care. Bye. We hope you enjoyed this video with Chris Marcus from Arcadia Economics. And if you did, you may want to check out our other video with Jesse Day from Commodity Culture, where we also discuss gold, commodities, uranium, and the other video with Versan from Black Swan Capital discussing the new payment systems the banking system is implementing. And if you did like this video, please like and subscribe, and we'll talk to you soon.